AT&T just cut its dividend in half. In half, my friends. I tell you, man, this is why you don't buy one stock and ride that stock because of a dividend yield. This is insanity gone wild, and you don't do this. You can't. I mean, you can do whatever you want. I guarantee people are riding Verizon stock the same way too. Guarantee. Financial planning 101 is you never have more than 10% of your investable assets in one holding. All right. I know people are loaded up on AT&T, Verizon, probably GE. You can't. I'm going to look. My man, I forgot the guy's name. I want to say Steve, but Texas. I forgot his name. Anyway, he just sent me this. This is interesting. Here's a YouTube video, which I'm not going to play to you because I'll get dinged. But check this out. And this is in 1980. The largest company in the S&P 500 was AT&T, $46 billion market cap. I imagine that's the market cap. Imagine. Anyway, so then I was like, now obviously the baby bells and all that stuff, but look at that. All right. And so AT&T just cut its dividends. I'm going to show you something else. From Visual Capitalist, and this is a great, I love this. Who's my man here? Jeff Desjardins. There used to be, remember Eric Desjardins used to play for the Canadians? Freaking hated that guy. Hate that guy. All right, visual history of the largest companies by market cap. Market cap is a price per share times the shares outstanding. And so here we go. I love this. 1999, Microsoft, GE. By the heat of the dot-com bubble, Microsoft broke a market cap record. It was worth $931 billion in today's terms. From look at it, 583 in 1999, almost $1 trillion today. Cisco, Exxon, where's Apple? Isn't that interesting? Lucent, remember Lucent? I remember buying and selling options off Lucent like you wouldn't believe, and getting, I made money, but it's like going to Las Vegas. Made money, but I got smoked ultimately. Nokia. Once upon a time, the Finnish mobile giant controlled 41% of the handset market. Look at that. The company struggled to keep up with smartphone revolution and eventually selling its ill-fated business to Microsoft in 2013. Who bought Yahoo? Who bought Yahoo? I can't remember. Was it somebody bought Yahoo for a crap load of money? Horrible investment. Lucent stock is the successor to AT&T's Western Electric. It was as good as gold during the dot-com era, had high dividend yields. And then it went bankrupt following the merger with a French company in 2006. Don't see Apple in here. Interesting. There's Exxon. GE, $319 billion is the market cap. Let's take a look at GE right now, shall we? Let's just take a gander. Look, in hindsight, it's always 2020, but the problem is no one knows the future, which is why you can't just bank on one stock, man. Why is it not showing up? Come on, man. Well, I guess we'll come back to that. Oh, there we go. All right, sweet. All right, so let's look at GE. What the GE market cap is. It's 107 billion. So GE has lost. Look at that. It's lost 67% of its value from 2004. You've literally made no money in GE. I mean, look at this. You've made no money. But I'm getting a dividend. All right, now when they cut it back, and right now the yield's only 0.34%, and the stock is only trading at $9. You've literally made no money. They do a reverse split. Yeah, trading 100. What the? All right, so they've done a reverse split of some sort because that doesn't make any sense. Trading at 100. What is trading at $9 before? General Electric. Yeah, they must have done a reverse split to stay on the S&P 500 is the only thing I could think. So they got rid of a lot of their shares. So they got market cap of 100 and no price earnings ratio. Market cap of 107 billion. That's freaking nuts, man. All right, and then we got what else we got in here? 2004. GE, Microsoft, Exxon. Exxon is killing. Look at Pfizer. Exxon. I sold Exxon at 64. Now it's at like 78. 80. I was up $4 yesterday. Jeez Louise and blue cheese, man. Look at old Josh. Old Josh. Look at that. Ay. Market cap of Exxon is $342 billion. It's still paying a 4.3% dividend yield of $1. 4.3% dividend yield. Jeez Louise. So I missed a 33% growth. I only had 100 shares, so but still, jeez. But even that, Market cap 283 billion in 2004. It's only 342 billion now. So it's not like it's freaking. I mean, you can. Let me show you what I'm talking about. Here you go. So if you look, it's gonna be hard to show you here. Yeah. So basically from 2001. So basically from 2001 to what's that? 2006 till today. Other than your dividend, you haven't made any money on a capital appreciation. All right. Pfizer, Citi. What's Citi? I can't stand Citigroup, man. God, freaking Citi. And their market cap is at 132 billion. So they've lost about half their value. British Petroleum market cap is at 104 billion. Intel, actually, I like Intel. Actually, I think Intel's a good stock. Don't buy it because I said it. I just told you my stock pick's horrible. Market cap 199 billion. So they basically not done anything. AIG, remember AIG? Yeah. Had to get a bailout to keep afloat, socialize the risk, and privatize the profits, man. I'm just curious, what's AIG doing now? AIG. It's such a freaking 49 billion market cap is AIG. Crazy. All right, so here's PetroChina. Is that S&P? I remember S&P. I remember reading about S&P many, many years ago, like in 2000. S&P. Yeah, Chinese Petro. I'm not sure if that's the same thing. That's got a market cap of 78 billion. It's paying an 8.5% dividend yield. Well, it might be a flyer, man. I don't know what Z's doing over there. I'm not so sure what's going on, but that might be one you take a flyer on just to see what happens. I'm not don't do it because I said. Riding the wave of red-hot economic growth, the number of Chinese companies left in the top 10 of the country's largest. Top 10 in the wake of the. Okay, I missed that. So the company even briefly surpassed 1 trillion in assets. Now its market cap is 76 billion. I'm not sure if PetroChina and S&P. S&P is Chinese Petroleum and Chemical Corporation. I don't know if that's the same thing. I don't care that much. Johnson. I don't know what the hell is that. Oh, look at these Chinese companies. This is largest companies by market cap. Yeah, right on. All right, Exxon, Microsoft, Walmart. All right, 2014. Look at Apple. Remember Apple? Look at that. Nowhere to be found. Nowhere to be found. But look at Apple now. 560 billion. The launch of the iPhone in 2007 helps complete Apple's turnaround. Remember that they were trading at 7 in 1997. 7. Exxon is still freaking up there. Wells Fargo, Shell, GE's 268 billion. So GE is right there. So it's right here to right there and just dying. All right. GE, after leading the pack in 2004, GE hit a rough patch in the financial crisis. After big declines in 2017, the company ended its 100-year run on the Dow. I imagine they did a reverse stock split in order to stay on the New York Stock Exchange. It's something like you have to have your shares stay above $5 a share or something like that. I can't remember the rules. To stay on the NYSE, you have to have your shares maintain a certain level. There's no essentially penny stocks in the New York Stock Exchange. And a lot of times what they do is they'll buy back their shares to boost the price. It doesn't do anything for you. I mean, literally, they're doing a split. It doesn't mean anything. They're doing a reverse split. It doesn't mean anything. But what they do there is they take back the shares. Because remember, market cap is dictated by the number of shares outstanding times price per share. So what's the way you eliminate? You would de-inflate the share, the number of shares that's outstanding to increase your price as you pull back the shares. And that's literally what they're doing. It's the opposite of inflation. It's deflation. Here we go. Microsoft now again. Microsoft, Apple, Amazon, Alphabet, Facebook, Tencent. Oh boy, Alibaba. Look at that. No AT&T to be found. Isn't that crazy? It'd be interesting. So it'll be interesting to see what doesn't come 10 years from now. Look, we're always going to look. Even Exxon's not even on here. What did I say? Exxon's market cap was? I can't believe I sold that. I mean, I can, but I just stupid. I took my gains. I mean, I did make some money. I made 50% gain. See, that's real quick, man. So I had a lady email yesterday, and she's been in a position for like 3 weeks. Is already up. I think she said 7%. And should she take her gains? Like, I cannot give advice on whether you should take gains. I don't. That's why I don't want to manage money, because I don't know. I get the idea. Look, I got 7% gain from not doing anything, but there is something to be said about trends and momentum. Usually, what's hot, you ride. You ride your winners and you cut your losers. That's one thing I've learned in the markets: is ride your winners and cut your losers. The problem is, and Peter Lynch said this, man, and I like Peter Lynch from Fidelity Magellan. He goes, look, you're shooting for a 10-bagger. So up 50% isn't even a 1-bagger. You know what I'm saying? 1-bagger is 100% return. A 10-bagger is 1,000% return. And so, look, the idea ExxonMobil is going to go to 5,000 million, it's not going to happen. But I took it at 50, up 50%. And obviously, I sold too soon. And that's the history of a successful investor, selling too soon. The problem is, though, a 50% gain while the market as a whole is going up as well. That's not that impressive. I mean, I'm glad I took my gains. It's better than losing. But you ride your winners, you cut your losers, man. That's all there is to it. I just, and look, I don't even want to do that, because it's like, it stresses me out. Buying and selling, just buy the index, be done with it. But anyway, I just think that's interesting. I want to look at AT&T. Let's look at a chart, shall we? All right, so let's look at AT&T. Let's see. This is back in 2019. Let's go back 5 years. I mean, look, you're just riding the dividend down over 5 years. That's does that look familiar? It looks like GE to me, man. Their PE ratio is 8, and their dividend yield was 8.5%, but they're cutting it from 208 to $1.11. That's basically a 50% decrease in dividends. So they're inherently the actual dividend per share. And so right now AT&T is trading at, what's the close yesterday? 24. So they're going to have $1.11 on $24. 1.11 divided by 24, they're going to have a 4.6% dividend yield. Yeah, so basically in half there too. You can say they got lots of, their PE is low, and I grant you it is low, but how much is that if we go to, let's see what their statements. Actually, they even got preferreds on here. That's pretty cool. Yeah, so here's a preferred original coupon, 5.35 face amount of issue. So I'm going to do a different video on that. Let's go to statements. I want to just see the debt. All I want to see is, I bet AT&T is dying in debt, man. And look, I don't know. Let's look at balance sheet. I bet they're dying in debt. So they got 2.8. What was that, billion? I can't even tell. We're going to assume that's $1 billion in cash. I can't tell. They got like quarterly trend. Okay, so I see. That's pretty, man, Schwab, that's pretty cool. They had nothing, then they got rid of a bunch of cash equivalents, and they literally put it in cash, it looks like. Well, let's look at their debts. That's all I care about. Debt, man. Debt. Yeah. Total debt, 157, was that $1 billion in total debt? And then they have 146 in intelligible. Look at that. I don't know if goodwill. Yeah, that looks like two different line items. So between goodwill and intangibles, they got 275 or something like that of billion of that. But how much cash they got? Total current assets, 52. I guess that's billion. Yeah. And they got current liabilities of 63 billion. Long-term debt, 153 billion, and they only got current assets. They don't even have current assets to pay the current liabilities. I mean, their whole assets are based on goodwill, intangibles, and property. I mean, that's freaking scary, man. They got more deferred income tax than they have cash. Ooh, yeah. Look, you can do whatever you want. I'm not telling you not to buy it, but man, my goodness, Pension benefits, other long-term liabilities, long-term debt, short-term debt. Accounts payable are $45 billion. And their current assets are, their account, all right, that's frightening to me. How are they paying their dividend? Let's see if we got dividend payment. Where's the dividend payment? Is that under balance sheet? It should be, right? Dividend payable right there. Let's look at GE. It's almost going to be identical to what AT&T was. And they're still on the New York Stock Exchange. Yes, they. Where's the reverse split? I'm sure they got a reverse split in here. Show events. So I think the reverse split must have been right there. Where's that? Yeah, I don't know. But look at that. They're down 157% for 5 years. Now, I don't know if that includes dividends, but 57% in 5 years. But even that, you got a 33% dividend. Price earnings right now, their forward PE is only 28. I guarantee it's going to be the same thing on debt. And these old companies are sad, man. It's just sad. Let's see what these guys, over 5 years, 40%. And then you just look at these, these, like this guy right here. Look at that. AT&T, the #1 company by market cap in the S&P 500. Here's General Electric. In 1980, General Electric's market cap was $13 billion. Now GE's market cap is $107 billion. That's 40 years later. AT&T's market cap was $46 billion. Now AT&T's market cap, oops, come on, man, there we go, is $174 billion. 40 years later. I don't know, man. So I want to show you this guy. Hold on a second. Here's money in the bank, and he says, this on a video I did, can I retire if I invest $1 million in QYLD? And he goes, of course you can. I know people that have $1 million in AT&T that live very comfortably. And I say, yeah, and they just cut the dividend in half. So if you're living off $1 million in AT&T and you're used to getting what we say 8% yield, let's just for simplicity, we're going to say it's $80,000 a year, and now you're only getting $40,000 a year. So I'm curious, maybe I'll do another video on QYLD, but this is what happens when you're too stock centric, is that anything could go wrong and your butt's cooked, man. You got to be diversified. That's why I'm all into VTV, man. All in. VTV, I'm sure there's AT. I'm sure I got freaking Pfizer in there. But dividends spread along companies is what I like. And by the way, I own VDIGX too. I haven't looked at that I'll do another video on that. All right, we'll see you guys.